Hey everybody, it's your boy Wayne here to give you a weekly wheel update. And can you believe it? We have now officially entered the month of June, which means I have been selling covered calls, cash secured puts, and otherwise wheeling stocks for the last 6 months. Let's go ahead and break down some featured stocks in this wheel series, and we'll start off with SoFi. As you guys know, when we last left off, I owned 300 shares of SoFi. That is not the case today. Let's go ahead and take a look at line item 17 as well as 19. Now remember, last week I talked about trying to stagger my date and strike prices, and I really wish I would have chosen a higher strike price. Unfortunately for me, SoFi had some pretty good news this past week, as you guys probably know, regarding the debt ceiling and the overall market conditions. One of the things that was discussed was lifting, I guess it would be the moratorium on student loan repayments. And so SoFi saw a pretty outstanding pop. So I had 3 covered calls. Again, my cost basis on SoFi was $5.50 per share for those 300 shares. And essentially, I've been selling covered calls right at my cost basis. I really haven't been able to take advantage of selling at a higher strike price because I wanted to focus on premium. Of course, in hindsight, based on those shares being called away this past week, if I'm not mistaken, SoFi ended at just above $7 a share. So in the last 2 weeks, SoFi literally went from $5 to over $7. And of course, that means shy of me either paying premium back or trying to roll my position, those shares were called away. And that's what happened, reference line item 17 and 19. I had strike prices of $5.50, which again was at exactly my cost basis. I made $10 on one contract, $13 on another. And again, I made a decision to let those shares get called away. So I did not earn any profit or share price appreciation. But again, I never sold below my cost basis ever. And so I do have one contract that's actively open. This was opened around the same time of the other 2. But as you guys recall, I chose a later date. So this expires next Friday, June 9th, and for doing the extra week, I earned a little bit more in the form of premium. I have a feeling, though, that SoFi is going to remain on that upward to the right trend, and these shares are going to be called away. So kind of a bummer. I wasn't able to participate in any share price appreciation, but one thing that I want to point out is we began this endeavor with SoFi as like a $5 stock, and I was really indifferent to the idea as to whether I hold, whether I was bag holding, whether I was in the red, or whether I was in the green. For me, when I am doing this wheel strategy, I am more focused on premium. Now, maybe going forward, I'll be more conscious of trying to capture that share price appreciation, but for right now, I'm pretty content. Let's go ahead and give you guys a calculator view. And real quick, I want to go ahead and tally up an average of these 500 shares that I have owned since March of this year. And you guys can't see it, but in the lower right-hand corner, it's given me an average price of $5.41 per share for these 500 shares. That's a total of $2,705. So let's go ahead and get my total, if you will, return on running the wheel. Now, I'm not going to factor in profit, as you guys can see, 2 times in which shares of SoFi were called away. I did earn share price appreciation, but I'm only going to focus on this $172. So let's go ahead and pull up the calculator app, and you'll see here, if I take $172 and I divide that by that 2,700, and again, that's the average cost of those 500 shares. You guys will see if I multiply that by 100, that means at $172 equates to a 6.35% return. Again, not bad because, if I were just to stop wheeling SoFi altogether, I can say, listen, I made 6.35% in total return. So that's where we're looking right now. I guess the question would be, Wayne, are you going to jump back into SoFi, even though it has gone up in share price? And yeah, I might. Right now, covered call premiums are looking a bit more lucrative than, let's say, cash secured puts, but it only takes a red day or a downward trend for the premium to go up on the cash secured put side. So Obviously, when these 200 shares were called away, that means I now have $1,100 in cash in my brokerage. So I'm either going to move on to a different stock or reevaluate if I can go back to SoFi and make some more money. Let's give you guys a look here at PayPal. And apologies for not having the chart up, but PayPal also has done pretty well in the last 2 weeks, slowly regaining and going up to the right. And that's a good thing because I bought near that 52-week low, if you guys recall, $64.96 per share for my 100 shares. And it went as low as I think it was high 50s. And so that was a bummer for me, but again, hindsight's always 20/20. Now the share price of SoFi has gone up, so I'm very optimistic that this is going to turn out to be one of my most profitable wheel endeavor. So far, I'm at a total of $130 in premium. Again, in order to generate some decent premium, I wrote the last covered call back in late May, so May 26th, but it expired nearly 2+ weeks out. So this contract is going to expire here on the 9th. We'll see if the share price of SoFi continues to go up and to the right. If it does, I would definitely consider rolling my position so I can take part in that share price appreciation. And again, the worst that happens is these shares are called away, and yeah, I only made a total of $4 in share price appreciation. But again, I'm not focused on that share price appreciation as much. I'm looking at the overall premium. And so far, considering that I've owned PayPal for less than a month, because today is June 4th, again, it's pretty cool that I've earned $130. So let's give you a running tally of all of the premium that I've earned exclusively from stocks that I've featured on this wheel series. And you guys will see TQQQ, Celsius, PayPal, Amazon, and SoFi. Now, I'm no longer doing anything with Amazon or Celsius, but PayPal, SoFi, and TQQQ are still in the mix. And I have made $2,398 since I began this wheel series. I believe it was in late to mid-February. Now let's give you a quick look at other options. As you guys know, I am featuring in these weekly wheel updates pretty much all the premium that I earn from selling quote-unquote regular covered calls as well as cash secured puts. And one of the things that I want to focus on here is the month of May is officially in the rear view. So you guys can see here in the month of May, I technically, and I say technically because I always like to zoom out as Brad Finn says, but I technically made $7,600 for the month of May selling covered calls as well as cash secured puts. I wish, and I know that number would have been well over $8,500 if I had not done so much experimenting in the month of May. So you might look at that number and say, Wayne, that's a fantastic number, $7,600. Let's go ahead and take a look here at some of the experimenting that I did in the month of May. And this is going to be a list of all of my cash secured puts contracts that I wrote in the month of May. So feel free to pause and take note if you want to do some research on these stocks as well. I'm going to go ahead and point out a few here, and I'm going to go ahead and highlight what I earned and what I lost. Starting with, I wrote my first iron condor in the month of May for AVGO, and I did make $63. Let's go ahead and scroll down here to some different other options. You guys will see I wrote another iron condor, again on AVGO. This time I lost $175. I also wrote an iron condor on IWM. I lost $34. You guys are going to pick up on a theme here. Scrolling down here, I also began to participate and experiment with covered call spreads, and I also looked at put credit spreads. And once again, guys, I took a big L when it came to AVGO. This transaction alone, I was minus $417. Now, I did pretty good on Netflix. I opened that up for $40. I bought to close at $5. This is probably one of the few wins that I had when it came to these newer spread positions that I experimented with in the month of May. So we'll go ahead and factor that in for a win of $35. But guys, we're right back at some more losses. QQQ, I wrote a call credit spread. I lost $75. I gained $4 on another transaction. AMD, I also experimented. I lost $75. Now, Google, IWM, and Microsoft, I was successful on these 3 transactions. So let's go ahead and give you guys a running tally. If we scroll down, you guys will see that Domino's Pizza, I also was successful on this transaction. Let's go ahead and factor that in. But again, Triple Q, I was down $93 on that one. If we scroll down here, Target is actively open, so I'm not going to factor that in. But all in all, you guys can't see it. With all of my quote unquote experimenting that I did in the month of May when it came to iron condors and then put and call credit spreads, I lost $708. So I go back here to this chart. You know, I wish this said $1,000 because I'm putting all of the credit spread information in the cash secured put tab of my spreadsheet. So, you know, again, I'm still up $355 for the month of May. But one thing that I want to point out is, remember, you can't just look at one month. You have to look at the totality of the year. And so right now, not including the wheel, I am at $14,794. Now, going back to Brad Finn's content, one of the things that he does a great job at doing is calculating what his return rate is if you factor in the premium earned from options compared to what your portfolio size was. That's something that I've never really done because, truth be told, I didn't know how to do it. But now I'm getting a little bit better versed on these percentages. So let's go ahead and take the month of May, for example, and we're going to go ahead and add up the premium that I earned, which was, again, $72.62 for covered calls, and then I earned $355 in cash secured puts. That's going to be a total of $7,617. So let's go ahead and put that in the calculator app. And now I'm going to go ahead and show you guys what the balance of my Robinhood account was, and I will always calculate all of my retirement balances at on the first of the month. So on May 1st, my balance in Robinhood, now I'm not including the Roth balances. We're going to go ahead and have to do that next month because I have begun writing options within my Roth account. But let's just go ahead and focus on the cash that I held and the stocks that I held in my Robinhood on May 1st. And that total is $393,156. So if we essentially take the money that I earned in premium and we divide it by that portfolio amount, which again, so $7,617, that's what I earned in premium. If we go ahead and divide that by what my balance was for the month of May, we will get a total return for the month of May of 1.93%. Now, if you guys are watching Brad Finn, you know that he has a goal of anywhere from 1% to 0.5%. And again, the idea would be that's for 1 month. So if I were to make 1.93% and I were to make that every month for 12 months, again, it would be nice to say, holy heck, at the end of the year, I had a 23% return on my money. I don't think I'm going to have a 1.93% return every single month. As you guys can see here on my other spreadsheet, take a look at January, guys. It was an epic loss because I had to consistently roll out my positions. But again, I am pretty happy about my pretty much average monthly return on selling options, and that's not counting the wheel total. So that number would probably be closer to 2% for the month of May. And if you guys haven't yet seen the first update on Race to 100, you guys know I am now selling options within my Roth IRA account, and I'm keeping track of that on a completely separate spreadsheet. Spoiler alert if you guys haven't watched the video, but in the month of May, I made $113 in covered calls. I made $460 in cash secured puts. That's a total of $573, not to mention the capital gains that I made on a few of my stocks that I bought low and subsequently had called away on a covered call. So I'm pretty happy about that. Remember, I don't just look at the month of May. I don't just look at the month of January. I zoom out and I look at the total. And so right now in options premium, if we factor traditional covered calls and cash secured puts, if we add up the wheel total year to date, I'm at $17,192. Not bad. I am going to stick with what I know for the month of June. I would seriously doubt you guys are going to see me dabbling anymore when it comes to put or call credit spreads. Who knows? I might feel adventurous. I do have one that's actively up right now on Target. As you guys know, Target has seen some pretty significant lows in the last 2 weeks. In fact, I think they just created a new 52-week low this past week. So I did partake. I tried to get $24 in premium, essentially with collateral of $100. This might work out against me, but I'd rather much have $100 as collateral versus, if we look at AVGO, my collateral has always been $500. So that is one thing that I've learned from selling credit spreads, where the difference in strike prices is over $100. That's where I've lost the most money. Hey, again, I hope you guys are having a fantastic trading week. We'll see you on the next one. Hey, guys, I'm trying to reach 500 total subscribers by this summer. And the way that I can get there is with your help. So if you haven't done so already, please smash that like button. If you haven't subscribed, I'd love for you guys to follow along on this journey. And again, we'll see you on the next one.